Good afternoon, MMTs. We are in quarterly earnings. Yes, Yahoo came out and reported their earnings. Once again, we have said that there was going to be a problem with earnings. We just want to start that there was a headline number, and we had shorts out up here at 35.50. It got to 35.4. The headline numbers that came out were somewhat deceptive. The guidance that Yahoo is going to give MMTs, as we said, that quarterly earnings, and we're just now in the beginning of them, and Yahoo tells a story for Google coming up on Thursday. So Q4 revs were below consensus. They have lowered the top and bottom line guidance moving forward. Now, granted, the new lady Melissa's did a good job over there, but let me tell you that the actual numbers, and one of the things that we're always very mindful of is that we have a very, very special software program that can tell us how deceptive that earnings are. It's not like in the old days when people were honest about reports. They've got all kinds of gimmicks in the accounting and whatnot. So this is a soft quarter. They have did good, and they try to put their Alibaba holdings involved. But here's one of the key highlights. Third quarter for 2013 was an 8% decrease year over year in the search revenue. That's number one. The display revenue, TAC, was 421 million for Q3, a 7% decrease year over year. Now, having said that, is that they've executed well. Companies grew their bottom line and top line by cost cutting and whatnot. This is a takeover and a turnaround story in this name, Yahoo. So moving forward, Yahoo still has a lot of problems it has to overcome. What we will say, one thing, is that it's a downside guidance, period, at the end of the day. And the initial headline, like in anything that we deal with in these after-hour earnings and earnings reports quarter after quarter after quarter, is one of the things is in Q3 they generated free cash flow of 249 million and returned an additional 1.7 billion to stockholders, which is good through their what? Buybacks. Let me tell you about 2013. It was a bull run, and part of this bull run, I would say that a good 70% of it was publicly traded companies doing what? Laying people up, cutting people, cutting the workforces as they've done. But most importantly is that they bought all their stock themselves. That's coming off of the table. We've been in, since year 2009, we've been in a multiple expansion, and the reason why I'm putting it in this live event right now with these live earnings is there's going to be a lot more of them that go down. And that at best, companies are going to struggle with both. Number one, you can't keep cutting the bottom line by firing people or laying people off. That's coming to an end. You got to grow profits on the top line, and you have to grow them from quarter after quarter after quarter. And granted, for the last 5 years, corporate America has done well. This is a big turnaround story. And what's going to happen is that other stocks are going to report quarterly earnings outside of Yahoo. They're going to be soft. Google's going to be coming up on Thursday. It's been a great mover in calendar 2013. They too had missed their numbers the last quarter, and they too will have problems. Not everyone is going to be a disaster, but what we are saying is that earnings are not, everybody thought that they were going to beat and guide the quarter up. They did not. And we want that to be known. And Q4 revs are below consensus. At the end of the day, we have to tell the tale of what it is. They're not growing. They're not giving upside guidance. Yeah, they've done well since it was a $13 stock and we were buying it. That's how corporate of America works. They do well for a period of time. What I can say is that it will remain in a trading range. The Alibaba is the biggest asset that they have. I just want people to know that. and that the display ads were down for Yahoo. So, therefore, there's going to be some challenges moving forward. So, we just want to make sure that people understand, our new people that are learning stock fundamentals and whatnot, is that we had said this was going to happen before it happened. And not only did we say that, as everyone is aware of, is how do you wade through these earnings reports? Well, if you want to get the training, all you have to do is do the following. Go to stockmarketfunding.com, get involved in after hours, get involved in the company releases, get involved in the filings, learn how to read the reports, learn how to decipher what is true and what is not true. Once again, it's a great company. However, there's softness in this quarter and forward downside guidance in Yahoo.